Traders must absolutely work how probabilities work. As a trader who relies on understanding how they operate is essential. I've talked about this before, but it's so crucial that I want to break it down again, step by step. First, the laws of probability work much slower than you might expect, and during that time, you need to consistently follow your system. What often happens is that traders panic when their capital isn't growing as expected. They start tweaking their strategy or even switching to another system. This is a mistake. Even with an edge, you fail to realize its potential if you don't give it enough time. If you've done your proper testing, stick to the rules, no matter what. Let's consider a relative 20% win rate and a 2-to-1 risk-reward ratio. I'll simulate 100 trades, with a risk of 1% per trade. Take a look. You can see the results after running the simulation 10 times. Each of these 10 graphs shows fluctuations, good periods and bad periods. Now, you might look at this and think, if this system is so profitable, I want to use it too. But look at what happens in the middle. After 30 trades in the worst-case scenario, the profit is nearly flat. Note that. If this were your performance after, it would be normal to feel anxious. But if you stick with the system, your capital would eventually grow to over 200%. This, my friends, is what randomness looks like, and this is how probability works. So, if you didn't know how the graph ended and were stuck at trade number 30 with little to no growth, would you trust the statistics? Many traders start doubting things is wrong when there's no growth after months of trading. They search for reasons to fix it, or worse, look for a new system entirely. This is how traders fail to extract the edge from even the best strategies. When I say probabilities, this is exactly what I mean. If you don't understand this, you won't be able to extract the edge from your system as a trader. Key points to remember: always show up immediately. What we recognize often looks random. If you focus too closely on short-term results, you'll be swayed by emotions and fail to win consistently. Instead, focus on the process and what you need to do right now. The results will come once you step back and see the bigger picture. As a trader, your job is consistently to leverage the laws of probability. Remember, probability works slower than you might expect, and not understanding this is like not knowing your own job. And of course, the foundation identified the edge in your system with a large sample size of data. But there's something even more important than just knowing this data: you need to experience it. Experience is what ingrains these principles in your trading. It teaches you how to make profits over large sample sizes and prevents you from getting shaken by a few losses. You can buy data, but you can't skip the experience gained through practice. No matter how tedious it seems, always conduct manual backtests and practice thoroughly. This is how you prepare to handle the market's randomness, stay consistent, and succeed in trading. In conclusion, stick to your system. Don't chase new strategies, chase consistency. Experience is your best teacher. That all. Thanks for watching.